Welcome. We're here at the 21st Lipper Fund Awards. I'm here with Mark Paris, head of Municipals at Invesco. First off, congratulations.
Thank you, Jack. Really great to be here and really appreciate the recognition.
Absolutely. The Invesco won 18 total awards this year, 4 trophies, tied for second most of all fund families. The Invesco Pennsylvania Fund swept its classification. It's one of 2 funds to sweep their classification in back-to-back years. Really an incredible feat. And then on top of that, Best Fund Family Fixed Income Group Award. So my first question, what about your investment process separates Invesco from the rest of the pack? And then maybe a thing or two about what you've learned over the past 3-4 years.
Yeah, so it's definitely clear to us that we are a fundamental bottom-up research shop. We do independent research, and whether that's looking at municipal bonds, corporate bonds, mortgage-backed securities, we do our own independent research separate from the rating agency. So that proprietary research is really the foundation of what we do. I'd add to that, on the municipal bond side, we like to do site visits. We like to go see that hospital. We'd like to go visit that nursing home. We like to go see where that charter school is being built. And that gives us a sense of the demographics and the geographics of an area, gets us to meet management in person, really get a sense of what we're buying. So obviously we're going to crunch the numbers and we're going to look at that part, but we're also going to think about the subjective part about credits. And the thing that I'm really proud of at Invesco is, I've been here over 20 years. Our research can stand up to the test of time. Our research is repeatable and consistent, and it's something that the portfolio managers can really put a lot of trust in and then add their relative valuability. As far as the last couple of years, I think we've all been challenged the last couple of years. I think what we've done great at Invesco is find out that our people care so much about our shareholders. They work tirelessly. I remember during COVID logging on at 1 a.m. in the morning and someone would be on from the team, or you'd log in at 5:30 in the morning, same thing, you'd find somebody logged on. So, what I've appreciated from our staff and what I've seen is that our culture is very strong at Invesco. People care about our shareholders and people want to work hard for them. And, at the end of the day, that's why we're here. And I think our culture has only gotten stronger by the test of some of the things that has happened in the last few years.
You know what? One thing I've learned about these Lipper Fund Awards, and particularly, we're celebrating active management, but it takes teams. It's not just one individual. There's a team surrounding, the portfolio managers, but also the portfolio management team. Your past history speaks for itself. Amazing track record. Looking forward, what are going to be the drivers of performance in the muni space, at the muni bond level or even the fund level?
Yeah, so I think, it's very clear in the muni market, we're very driven by technicals, supply and demand. And this is going to be a year where maybe we get a little bit extra supply, but we're really hoping that the demand component comes back in the muni market. We've had a lot of investors leave. Duration was a very difficult thing for people to kind of live through. We know that people like the short end of the market as rates have come high. And so what we're expecting to see here in 2024 is a little bit of a removal from that short end and realizing that tax exempts are such an important part of your portfolio, such a way to get really good yields. You look at where corporate bonds are, you look at where mortgage-backed securities are. On a tax equivalent basis, munis look very attractive to those taxable options. So, we really feel like 2024 is a year where we'll get money back in, supply will be very manageable. And then if you get something going on with the Fed around the summer, you could have really good timing in the muni market where there's not a lot of coupons, there's not a lot of issuance June, July, August, and yet maybe the Fed goes ahead and gives us some little bit of a gift in rate cuts. So we're very constructive on 2024. We think muni credits are in a really good place. And what we really want to see is the retail investor come back and embrace that tax-exempt income that they love.
Yeah, Q4 of 2023, long duration, the performance really was realized there. And I think we're starting to see those flows again into the muni bond space. So, I'm with you. I think there's going to be inflows into that tax-exempt space in the coming year. You've hit a lot on what makes active management so important, so valuable. But I think in the general fund market industry, there's so much made about passive, core index tracking strategies. Maybe hit on maybe one or two more points on what makes actively managed fixed income funds at Invesco so successful and such a differentiator versus your competition?
So we hit on the research, but it's also the amount of relative value work that portfolio managers do and experience in that market, understanding when flows come in, what the dynamics of the market will be, when there's stress in a particular credit, how many sellers are going to be there. The municipal market is great because it's not a quoted market. So you can't just look on a screen and look for a bond price. You've got to negotiate with who you're trading with. You have to understand how many people are looking to buy the bond, how many people are looking to sell the bond, as well as the fundamentals of that bond. We believe that we can add a lot of value in fixed income across all the platforms by adding that relative value knowledge of each sector, plus building off of that fundamental knowledge. And people look at indexes and they say, well, the index did this or the index did that. You can't always buy that index. You can't always invest in that in fixed income. It's a little bit different than the equity markets, especially in municipals. So indexes are hard to replicate. So where we add value is different names that come up in the marketplace, different coupon structures, callable structures that exist, what part of the yield curve that we like. And that comes into play with both, the work that the PM is doing, but also the quantitative work that we do in the markets in general. So from our seat, we believe there's a lot that we can add for the retail investor. And, we can manage liquidity a lot better by not just, indexing. We can say that when we need cash flow for our investors, there's different things in the portfolio that we've keyed on that we can go in the marketplace and find a good bid on.
Well, your investors thank you for your recent success. The last question, this is a fun one for us, but what does winning all these Lipper Fund Awards and especially the Fund Family Trophy, what does it mean for Invesco, maybe your strategy or your teams back home?
Yeah, it means a lot to us, Jack. So first of all, thank you for the recognition. We greatly appreciate that. And I think the teams feel good about that. But I also hear from our teams that we just got to keep on doing it again and again. And, the repeatable process is what investors want to see, that you can continue to stick to your knitting, stay consistent in the way you look at investments, and continue to do that. And we know that if we put the shareholder first, we'll get some accolades, but we'll also be doing what's right for the shareholder, producing good income for them, producing good long-term total returns. And that's really our goal. So while this is great and the team feels really good about it, and thank you for that recognition, and I want to thank you for the team as well, we know that we got to continue to do what we do best for our shareholders, continue to deliver on the promises that we made. And that's the challenge now that we've won this, to say, hey, we're at a standard now and we got to continue that going forward.
Well, Mark, you're a busy man. Thank you so much for your time. I appreciate you being here. Enjoy yourself tonight. Have a few beers, and celebrate.
Thank you, Jack. Appreciate it.
Thank you.